Welcome to Startup Simplified, Aakrit.
Thank you. Thank you for having me.
And welcome to Jakarta.
Oh, yes. Thank you so much for having me. I may look a little tired, but that's only because I did not anticipate how busy and hectic the last 2 days will get. It's been incredible fun.
I'm glad. So, how are you finding Jakarta?
Bombay.
Okay.
Or Mumbai. So I grew up in Mumbai and then I was in the US for about 10 years and then I came back to Mumbai. Then it's funny now, sort of 10 years later, I'm coming to a place that's exactly like
Mumbai, right?
It's like literally like today I was, on the street waiting for a taxi and, there was like two-wheelers almost stepping over my toes.
Over the footbridge, right?
And it felt like, oh wow, this is like I'm standing in Bandra.
I know.
I think a short summary would be that. But the positives are that even the energy levels and the hunger, that environment is so similar. People are always on the move. People want to do more. People want to do exciting work, and at least for the most part, people seem very straightforward.
Absolutely. I am with you on this. Okay, so let's kickstart this conversation with a very brief background. Look, let's not go into your whole journey. I think your whole journey has been documented so many times. I'll just drop a few links out there in the description. But a very brief journey so that the audience gets an idea of who you are and what is Haptik. And then we will talk about this Indonesia expansion and more.
Yeah, sure. So Haptik is a conversational AI company. We started exactly 10 years back. For the first 4 years of our life, we were building a direct-to-consumer personal assistant app. So I always joke about it these days, saying that I tried to build ChatGPT 10 years back, where you would download this app on iOS or Google Play, and you would basically ask it anything that you want to do. So book me a flight, set me a reminder, where's the nearest restaurant, ATM. It was meant to be that type of an experience. We were very early.
Yep. Way ahead of its time.
Way ahead of its time. And, I know, like you said, my journey is everywhere, but in every place, wherever somebody asks me, I often, this is the point where I tell in every conversation that lesson number one from my startup journey is it's equally bad or maybe even worse to be ahead of time than late. And I think for us, we were way ahead. We were decade ahead, basically.
Sure.
Right?
Yeah.
So, combination of technology not existing in the right format, user behavior not being there, we realized that's not a product that will scale. So we pivoted in 2017, where basically we took the underlying tech and packaged it as a SaaS product.
Okay.
Then brands to use for their own chatbots.
Sure.
17 we started gradually, and then 18 the business really took off. And then in 2019, Reliance Jio came in. And they basically, said, while you were trying to raise a...
Talk a bit about Reliance Jio as well. Huh?
Yeah.
Who they are. Just to like...
Oh, yeah, of course. Sorry, I forgot that, we are here. So, Reliance Industries is a $200 billion market cap company. They're India's largest conglomerate.
Sure.
I think one of Asia's top 10. Our chairman, Mr. Mukesh Ambani, is Asia's richest man. And they have traditionally... Every decade, they've pivoted as a business. They started as a textiles company. Yep. Then they became a very large oil company and a refinery that they built, which is the world's largest refinery that's in India. And then they started their journey of what they call becoming a digital company about, I think 15 years back when they first built, their telecom operator, which is called Reliance Jio. And that's when the Jio brand started. For those who are familiar with India and for those who are watching and know Reliance, here's the funny part. If you just think about it, Jio is 7 years old.
That's it.
The Jio, which feels like it's
been there forever.
It's taken over lives of people living in India. It's 7 years old. Jio is younger than Haptik in terms of from the time that Jio launched. It launched in 16, So, how Jio Haptik happened was Jio as a telecom operator launched in 16, but by 18, as part of their vision, they have like this 50-year-old vision, right? So as part of their vision, they were like, build the telco, build the pipe, and then build digital services on top. And one of the things they were very keen to do was build an AI company. And that's when we met. And they said that, look, we are very impressed with what you've done. And we said, obviously Reliance is great. And then they came in and acquired majority in the company. But they were very clear with us on day one, and so were we. And that's how it all evolved, that this is really a sort of a joint venture partnership. We want to build this company together.
Nice.
It's not a situation where we want you to integrate with Reliance.
Doesn't generally happen, right? When a conglomerate's acquiring a startup, it's always about basically swallowing it in completely and making it part of themselves rather than giving that independence.
And to be honest, I thought as much as they would say, and as much as we would put it in our agreements, and as much as we would keep talking about it, I thought reality is that's what will happen. And we were very skeptical of that. But kudos to, I think, them firstly, and then subsequently us to continue building a business that has actually worked out even better. I often now tell people that for me, literally what happened is my cap table changed.
Yeah, exactly.
And thankfully, instead of having 7 investors, that is a one-to-one who's just a partner who I work with. Right?
Sure.
It worked out well. And then once they invested, the first couple of years, we kept building it. And then since then, we just scaled up our SaaS platform, which is an AI business. And then, the last 2-3 years, we've now launched a bunch of new products.
Sure.
So the first one we launched was Interact, which is essentially our SMB platform.
Okay.
What you do is, if you're a small, medium business, and this is not the mom and pop store, this is the actual MSME or small business. Your CRM today is nothing but WhatsApp.
Yeah.
You do your business on WhatsApp, your employees are on WhatsApp, you send invoices on WhatsApp, you do everything on WhatsApp, including sales today with your customers.
Correct.
So we saw an opportunity that, this is all happening very unorganized way. How do you build a product that can really organize this? So Interact is our WhatsApp CRM.
Okay.
So it's meant for a small and medium business. Starts at $15 a month, going up to $40 a month. And essentially, think of it like the modern Zoho, Zendesk, but built for a WhatsApp first world for SMBs in emerging markets.
How do you go about selling this to SMB?
It's like a consumer sale, digital acquisition, right? So basically people find out about it through word of mouth, references, website, when they search.
Okay.
They come in, we give a free trial. It's fully automated self-onboarding, and then a telesales team that converts them.
Oh, it's interesting.
Yeah.
Okay.
So that has about 12,000 merchants now.
Oh, already 12,000.
Yeah, in 2 years. From my calculation, is actually the fastest growing small merchant SaaS product in India in the last 10 years.
Okay, we'll get into the details of conversational AI in Indonesia, but let's just dig a bit deeper on Interact, because it's very interesting. I've come across a lot of founders, a lot of startups who've tried to solve for MSMEs, SMBs, and most to a large extent have not really been able to find the product market fit. The complaint always is that, hey, listen, this category does not want to pay. This category is very difficult in terms of adoption. This category is very fragmented and they have their own unique needs. What prompted you purely that, hey, listen, there is a market out here? Apart from the fact that, hey, listen, they were using WhatsApp for various activities, but what was that nudge for you that, hey, I can make a sizable business out of it?
So more than the nudge, it's already a sizable business, right? So I'll maybe talk about learning. See, the nudge for us was very organic, right? So we were an enterprise platform, but we used to get tons of inbound leads from this segment of the market.
Oh, okay.
Basically saying that even we want a WhatsApp messaging tool, we want a WhatsApp chatbot and so on, because there was a large amount of business happening.
Sure.
Second, we obviously saw it in front of our eyes, right? Whether it's Indonesia or India, every SMB just lives on WhatsApp in every way, right?
Correct.
Like I said, your customers are there, your employees are there, all your groups are there, you share catalogs there. So unorganized business has been happening for decades. Then third was the WhatsApp business app. It's also a separate app that Meta gives. That was growing so much in traction, but that's just limited functionality, right?
Correct.
Because it was meant to be for the mom and pop store.
Correct.
So these were it was almost apparent to us. In fact, before we even started building it, I've been thinking about it for 1 year, and I was just thinking, why not? And you kept thinking. And then finally, a couple of triggers of we put our team separate team out. Another learning for me was that when you're trying to build something new in a company, do it like a new company. Even if that means that tomorrow you will combine it, that's fine. But that freshness will only come once you spin it out. So we actually put like a separate team in a separate corner of the office. You're like this. We used to give it a nickname.
So startup within a startup.
Absolutely. And we built it like that. We had sort of one person who ran it for some time. She got it to a certain stage, and then we brought in somebody else who done it. So it was actually built like that. So those were the insights. And the learning for me is the biggest one is the following. SMB, you need to treat it a lot closer to a consumer business than a B2B SaaS.
B2B business. Yeah.
All the things that you mentioned to me, willingness to pay, fragmentation of needs, everything is, if all those problems are, if you think very enterprisey or B2B, right?
Mm-hmm.
If you think B2C, what will you be asking? The first question you'll be asking is this a must?
Must have. Correct.
Like, that's how your thinking starts, right? Like, is this something that, I say this always, vitamin painkiller, right? Is this a painkiller? Is this something which your customers won't be able to live without? And exactly right. In SMB, there's not going to be that many products, just like in consumer.
Correct.
As a consumer today, what you use 7, 8 apps, 10 apps maybe?
Yeah.
Exactly. So an SMB will likely use 4 or 5. So the challenge with the SMB space in emerging markets has been people thought of it like this guy is going to need 20 different tools, and thought of it like a B2B sale. But if you wire yourself as if you're selling to a consumer and then you're charging him $50 a month, then your bar on the way you build it and the painkiller element has to be very, very high.
True. Interesting. Let's talk a bit about conversational AI, right? I mean, I have a fair bit of understanding.
You have a fair bit of understanding of most things.
But let's break it down in a way that a fresh graduate from college would also understand. So what's conversational AI?
See, conversational AI is fundamentally in any digital conversation or any conversation that you're having typically with a business. This could be either on their website, through third-party platforms like WhatsApp, or it could also be over the telephone on the voice, right? The thesis is that, these are conversations that you're having. AI today can very easily understand and interpret those and respond back and act as an agent instead of necessarily a human speaking.
Okay.
So fundamentally, that's the bottom line. The most common experiences that any user would have encountered is many websites now have the bottom right widget.
Yeah.
You hit that, and then typically there's somebody says, hey, hi, hello, and you'll see automated responses. That's AI.
Sure.
Lots of times when you call a call center, instead of IVR, especially in the US now, they'll respond back to you and actually try to have a full conversation with you. That's again conversational AI. On WhatsApp, you message a business, again, you'll get back response to conversational AI. For 9 years, the technology behind this was something called as natural language processing, NLP, which is the same technology that, let's say, search using. And then suddenly, 1 year back, everything changed. And now the technology that will become the more prominent technology will be LLMs, which is also what now search is going to use.
Correct.
So anyway, it's basically in that sense, the science or the computer science behind all of this is follows the same path as search.
Sure. Would it be fair to say that in India, which is your primary market, Jio and Jio subsidiaries are your largest customers? In terms of the build which you have done for them, which can be deployed, let's say, to the other customers and partners and more?
So they are the largest customers, but we actually have, so Jio and Jio subsidiaries are 9% of our business.
Okay.
So 90% of our business is everything else, out of which about 30% is now Interact.
Nice.
Right. So
we just started 2 years back. Awesome.
So 30% is Interact, 60% enterprise, 10% geo.
Sure.
So in the enterprise customer, so we've done very well actually in the emerging economy in India. So I think that 1/3 of the unicorns in India are our customers.
Sure.
So Dream11, Paytm, Byju's, Ola Cabs, Oyo Rooms, Paisa Bazaar, Hotstar.
So it's all across segments,
Yeah.
verticals.
Yeah, off business now. I'm just signed up. So they're again a very large customer.
Sure.
So across all these places, we've done very well in that category. So as a result, that segment, and then of course we have our CPG customers.
Perfect. This actually clarifies a lot. I mean, there's an assumption, right? That listen, okay, Haptik got acquired by Jio. Jio must be the largest customer. But okay.
But yeah, see, back to my point, right? The goal for every shareholder of my company is to create shareholder value.
Of course.
So that's not going to happen if you're not going to have a robust growth business coming from everywhere.
True. Okay, now let's move to why Indonesia, right? I mean, you and me have been speaking for close to 2.5 years now, right? And I remember just during COVID, that is when you were willing to experiment and explore Indonesia, but for whatever reasons it got pushed. And now when I meet you, you're like really bullish about Indonesia. What has changed?
So, Bipin, I think I was telling somebody, I've repeated this multiple times over the last 3-4 weeks. I have a thesis about business in general, which is that I don't think markets run away anywhere.
Okay.
And by markets, it could be a geography or it could be a product. I actually think that if you build the right product with the right solution at the right price point, there'll always be a market and there'll always be a product. In fact, in some cases, it might be better to wait it out and be a little late.
So you don't think that, let's say, a competitor will capture the market and it's going to become difficult?
No, I actually feel sometimes it's better. It's a very better thing. And the reason is because what will happen is that when you enter a new market and when you're trying to do things, the level of education required is so much.
Mm-hmm.
And then in addition to that, you'll make a lot of mistakes. Right? So there'll be the first couple of guys to some degree who, let's say, will then start getting a name that, okay, look, this solution doesn't work. And more importantly, you'll not get to learn and see and very carefully observe what's going on.
Sure.
And what people really, really want. And if you wait for some time, not only will patterns and trends start to emerge, but you'll really know what are the use cases where you'll make money. What happens often is, right, if you enter a market and if you find use cases that you build but that don't make too much money for you, then you get stuck with those. Then again, long term is very difficult to change. You're going to go into those. Right?
Okay.
Versus if you enter a market knowing where are the value pockets, it becomes a lot, you have a much better idea.
Sure.
To be very honest with you and frank with you, I always used to think like this for my entire life, but this thesis became a lot more solidified. This is one of the things I've learned from Reliance. They enter every market 10 years late.
Yeah.
It's crazy, right? Telco was 10 years later, retail was 10 years later, now Geo Financial Services is 15 years later.
15 years later.
Because they are very simple thesis that, they keep saying that they believe that emerging markets, and they say it for India, I generally believe for emerging markets, they are actually a supply constrained market. Demand will always be there. Demand for everything will always be there. You have to just deliver the right product, the right solution. Just think about Interact, right? SMB app existed forever.
Yeah.
Go sign on to 10 platforms self-serve. You could get it. Nobody just put their mind in thinking about where the gap lies.
True.
And same, to extend your question of why Indonesia and why I'm excited now. I have discovered in the last 2 days at least 6 things over here that nobody's thought about.
Okay.
Whether it's use cases, whether it's way to build things, whether what works, what does not work, because everybody's been doing the similar things, So once we now go with that, hopefully, we'll see, we will find the right reason to succeed.
Sure. You already have some customers in Indonesia.
Yeah, so that's what. So our playbook is the following, right? We sort of, somebody had told me about this long time back, meet, make, scale.
Okay.
So meet the market is 2 years back, somebody told us, why don't you go meet this customer? That's when I spoke to you the first time. We met, we understood. Make is get 8 to 10 customers, which we've done now.
Sure.
Right. So now, in fact, today is a great day. One of our flagship customers, Alpha Gift, announced their chatbot on WhatsApp.
Right.
And I've been seeing Alpha Mart everywhere. So
Yeah, I mean, it's one of the largest chains over here.
exactly. And then Seolim Hospital, again, I've been seeing everywhere. And then Chatai, which is also popular. So we have such 8-10 customers.
Sure.
And now, again, with them, we learned a lot. We've identified what works, what does not work, where are the gaps, who's the players, who's doing what. And then we'll scale. You know, today I met 1 or 2 competitors of mine on this trip. You know, and if you dig below about what they're doing, lot of scale, lot of customers, but barely anybody is making money because they're doing some use cases that don't actually make too much, right? So versus now I know that we stay away from them and we focus on the value pockets.
We'll also talk about SaaS companies not making money, maybe gradually during the episode. But sticking to Indonesia, right? I mean, of course, you've now got a few customers, you've got your learnings. What's next for Haptik in Indonesia? I mean, we spoke yesterday, and you said that you're willing to make a large investment, be it in terms of time, effort, and money, in Indonesia. What kind of roadmap do you have? This is also coming from a perspective that what kind of roles you would be hiring for, because I'm pretty sure there will be a lot of our listeners who would probably fit into those roles.
Amazing. Yeah.
So yeah, what would be that?
So we're looking to build basically sales and account management. So essentially build a local presence for business development, software sales, customer success, customer support. I think those are all the functions that we will need. Maybe some bit of implementation and solutions engineering as well. And the roadmap for us looks like, our global strategy remains very similar, which is we acquire customers through getting them onboarded very easily through something like a WhatsApp business, or agent chat, live chat, and so on.
Land and expand kind of a strategy.
Yeah, but ultimately for us, the value for customers comes when they use our AI product. That's the margin business. That's the one which is our core IP. That's the one which, is our product, right? It's not just me selling something else.
Sure.
So that's the same thing that we do over here fundamentally. And in fact, it's very interesting, right? That one of the things that learning is for me is, everybody's been chasing this WhatsApp, but nobody has explored the entire use case of in-app and web-based chatbots, right? Which all said and done, you still have substantial amount of traffic going to companies' websites and apps, right? So now,
I mean, I won't say no one has. I mean, quite a few brands are, but again, the adoption's not as high as WhatsApp.
Correct.
I mean, so generally, it typically happens in business, right? The new flashy thing, and then everyone just pounces on that and wants a piece of it. But yeah, I completely agree. I mean, there's a massive amount of traffic is coming on the app, on the web, which still needs a lot of interaction, which can be automated. So which makes sense. Let's talk about SaaS companies not making money. So for me, it's been a recent learning in the last 6 to 8 months, where I've spoken to quite a few founders, quite a few venture capitals, and I hear that SaaS companies are taking debt these days. Why does this happen? This is, I mean, might not be from your experience, but from your extended circle, and I mean, you're an active investor yourself. What happens out here?
No, so the SaaS companies taking debt is more down to the global fundraising market, right? So obviously because of the whole interest rate phenomenon in the US in the last 2 years and so on, private funding is anyways at its lowest levels. 2021 was obviously a party for everybody, but then the last 2 years has really slowed down. So as a result, right, every company is now, changing course. And what you asked before as a question is there's like many pieces of the answers to that. But again, if I had to lay it out, right, there's basically 3 things that sort of got us here. So first is, for the better part of 5, 7, 8 years, right? Every founder in technology built in a world where capital was freely available.
And in abundance.
So when you do that, then your DNA and culture as a company building is very different, right? Then
Correct.
you're not looking at things like gross margins that closely. You're not looking at unit economics that closely. You're basically seeing market share,
Yep.
right? That's all that matters. Now, once that capital pipe has dried up, to then switch is very, very hard. And the switching is the DNA of the company. The culture of the company is very hard. And that's the answer to your question. Every company, whether SaaS or otherwise, has taken a lot of time to just change this culture of when I looked at my company, we were so bloated in so many areas. 10 experiments are going on in some corners, 12th experiment here, everybody's doing this, everybody's doing that. But when you start thinking in this way, it's a very different business that you run, right? Now, that was first, right? Now, second is, as you're doing that, not every company has that much runway. And not every company can switch that fast.
True.
And not every founder wants to switch that fast. So then you have to turn to alternate means of financing. And so debt becomes one of those, and debt can be in many colors also, right?
Sure.
And then finally, the third is that ultimately, like as a founder and running a tech business, how do you get out of all of this? You're going to get out of all of this by showing now proper P&L. And that will take time.
Correct.
That's not going to happen by just culture change. That will have to be then built.
Sure.
For which you need more time, more runway. And again, modes of financing become other factors.
So, fair points. So, another question, I mean, might again not related or not related to Haptik, but purely from your experience and understanding, right? I hear from brands and a lot of CFOs that there is a SaaS fatigue of sorts, wherein there are too many SaaS players within an enterprise, and there is a sort of a cleaning exercise which is happening. Do you think we have overdone SaaS as a market?
That's a great question. I don't think it'd be right to say we've overdone SaaS as a market, but maybe the right answer is there's a lot of crappy SaaS products out there.
Okay.
I think that's the difference.
And they were able to sell it to enterprises.
In the gold rush. Because in the gold rush, even enterprises were buying everything. And nobody was questioning them also. In the gold rush, everybody wanted to become a digital transformation company, right? So everybody was buying everything. I think that is... See, what happened? Gold rush, more capital being thrown at more companies. That means that companies can hire companies then can hire very, very strong sales guys.
Yeah.
Okay. So let's say there's $100 available to invest. You invest $100, right? Market can only take in 60, but you invested 100. Now the remaining $40 has still gone behind good founders who will still hire great salespeople.
Correct.
So you will sell the product just based on your sales ability, because of the product. But really, those $40 never should have been invested because the product should never existed
in the first place. Interesting.
The reason why there is an over-SaaSification.
Sure.
But the market still is very large.
Right? Market still is very large.
Market, absolutely. In fact, I feel like there's so many problems still to be solved. In fact, just look around and I'm sure, when we sit with any of our customers, currently they're complaining about how, we have all these things we need to clean up. But like there's so many efficiency issues that can be solved within an enterprise.
Sure.
At so many levels. So I think the market is large and, just people need to dig enough, spend close time with the customer to find those problems.
Fair enough. Coming back to Southeast Asia, so from an expansion perspective, the focus is majorly on Singapore and Indonesia, or you're exploring the whole belt, Philippines, Malaysia, Vietnam?
Oh yeah, interesting question. Yeah. So actively we've so far done Singapore and Indonesia. We do have customers in Malaysia.
Okay.
That came through just organically, without us being a dedicated focus. So that's Sing in Malaysia. And, let's say the other markets, I don't know. So why I don't know is before this trip, it wasn't the focus. And last week I was in Singapore, and then Jakarta. So before this trip, it wasn't a focus. But now, based on some learnings we're having, we might want to think about what those markets look like.
Nice. I think that'll be good. I am very bullish on Southeast Asia as a whole.
Yeah.
Of course, there are certain economies which are extremely promising, but as a whole, also Southeast Asia is very promising to me. And spent quite some time over here, and I've figured out that, hey, listen, there are so many opportunities available, be it in the traditional businesses as well as digital businesses. So I'm glad that you're having a change of heart and mind out there. Okay, let's talk about what's happening in 2023, purely from startups' perspectives, right? I mean, you have a lot of unicorns within your own, as your customers who are using Haptik, and you're very active with the founders and the venture capital world. What do you see? Where are we heading now? I mean, there's been a funding slowdown, definitely. The number of deals which are happening have reduced dramatically, vis-a-vis comparing it with even 2022. Forget 2021. I mean, that's not going to be a fair comparison. But with 2022 as well, where do you see we are going as an ecosystem, startup ecosystem?
See, on the early stage side, it's the best time to be an investor or a founder. By early stage, I mean that starting a company for two reasons. As a founder, this is like the time where you're going to really find problems and really build profitable companies out of the box. It should be valued.
Correct.
Like your investors will also love the fact that you're thinking about that. Second, for founders, why it's interesting is, see, most founders, right, come out of larger companies. Now what's happened is, finally, now that this whole valuation bump up party has stopped, your ESOPs are not as valued anymore.
Correct.
Right? So might as well now, good time to kind of jump out and start a company where the risk and the reward ratio could be a lot higher.
Sure.
Investors, same thing, right? Like, as I put my investor hat on, valuations are very reasonable now when you're investing early stage, because that's what they should be.
Yeah.
Like if you invest in an early stage company at a valuation of 20 million, you're basically saying that, look, for me to do really well, this company has to become 500 million.
Correct.
If you look at pure P&L, for a $500 million valuation company, you need to be doing $60-70 million of revenue, maybe minimum. How many companies actually do that, right? So 20 million has become not like it's gone. Those days are gone, right? So I think the valuations have become much more reasonable. So yeah, as an investor also, I think it's great. So early stage is very exciting, great, lot of action in our ecosystem as a whole. Coming to the late stage, late stage is where, of course, it's completely opposite. There's no capital for anybody beyond, let's say, a CD round, very difficult to raise capital. India as a country, for example, has created one unicorn this year.
Yeah.
Or two maybe, versus, last 2 years was, Mr. this big party. There, obviously, what's going to happen is, somebody had told me this very nicely, which is that, let's say there are 100 unicorns in India, a third are extremely solid businesses who actually have no need for money, like no shortage of capital, and they will become great companies. That's one extreme. The second extreme is a third who are really the opposite end, which is that is going to be not a great ride for them. They'll have to pivot, figure out, they'll have to do lots of things, and most likely it'll be a fire sale that will happen to some degree. Sure. Investors will swap paper with each other. And then there's a middle third, right? The middle third is, okay, look, I've cleaned up some of my act. I've worked really hard to clean up my act, but I'm nowhere close to the top tier. So typically, obviously, what will happen is that excellent, amazing teams and founders over here will graduate to the top tier, and those who either are unlucky or not able to execute will fall to the bottom.
Sure. What do you think about all these reports coming out wherein LPs of these large venture capital firms, they've been found quoting that, hey, listen, India as well as Southeast Asia has not been able to give the kind of returns which we are hopeful of. And I mean, these are the LPs who've been invested for a decade and more in some cases. What do you think about that?
I don't think they're wrong. I think that they're factually correct. this leads to another thought I've been having for a very long time now in India is, see, venture capital as an asset class was built to invest in pure core innovation.
Correct.
Back from the semiconductor days, it was meant to you'll create some strong IP that will take a long time to build. You'll have an inflection point and you'll make a lot of money. In emerging markets, there's no business like that, right? All the tech companies that you all build, there's no core innovation. It's just like offline to online digitalization, or it's a better mousetrap, right?
Mm-hmm.
So I'm not even sure if the pure venture capital asset class, right, in its purest form, in the way it's supposed to be done, is fit for the emerging market. I actually think that there may be a different form of VC that everybody will have to accept and agree to, which will not be on this idea that there'll be something magical that will happen. It will be on the idea that they'll invest. It'll take 7, 8, 10, 12 years to gradually grow and ultimately become a great profitable company, and that those return risk profiles will look very different.
Sure.
The classic VC asset class suggests that you bet on 10 companies and one become really big.
Correct.
Maybe the emerging market, sort of sources or secret sources that you invest in 10 companies and you hope 5 become decent.
Yeah.
Right?
Yeah.
And that then presents, it's a very different way of setting things up.
That's a very interesting thought. Well, it's actually a very interesting thought. Very quickly on the mismanagement of funds, which we've been hearing by a few startups and their founders in the last 1.5 years, right? I'm not very sure how much it's true, how much what gets out there on TechCrunch or Tech in Asia or your story. But do you think it has become prominent, or it's still one of those rare phenomena which occurs within the startup ecosystem?
It's as prominent or as rare as these situations happening in corporate world.
Yeah. So it's always been happening, but now it is becoming more prominent, or it's more visible?
No, I don't know. We have to think of it very differently, right? See, whether it is the US, whether it is India, or whether it is Indonesia, or anywhere in the world, right? If you go back 100 years, in every economy, in every profession, whether it's business or government, you will have bad actors. That's just maybe capitalism at its core, or that's the 20th, 21st century, whatever you want to call it, right? That's the environment all of us have been in. You'll always have bad actors, whether it's corrupt politicians, whether it's scam corporates, whether it is pollutants, or whether it is startup founders, right? There'll always be a certain percentage. I think the reason why you've seen some of these happen now is because the startup economy is so new, right? So it'll only 7, 8, 10 years in, you'll find the first few.
Sure.
Obviously, there'll be enough people who try to correct it, but to some degree, I'm not sure how many Hindi-speaking listeners I hear on this, but we use this word niyat, right? And niyat essentially in Hindi and English translates to intent.
Correct.
If you're a person who has bad intent, whether you will start a company or join politics or be in a job, be a janitor.
Correct.
You will do wrong things.
Sure. No, absolutely fair. While let's finish this loop about founders and investors. So you are an active angel investor, and now you're part of quite a few associations back in India as well. Do you intend to extend your investments to the Southeast Asian regions as well?
Not yet.
And
I'll tell you why. See, as an early stage investor, whether it is an angel or a micro VC fund, 99% of your bet is on the person.
Correct.
That's it.
Yep.
Because there's nothing that time.
Yep.
Now, if that's going to be the case, then your sort of selection has to be the best people.
Correct.
Now, how will you get the best people or meet the best people?
Yeah.
When you have a very vibrant local network.
Yes.
And that network is because you work in the market, you spend time in the market, you're part of associations, you invest, you're a founder, whatever, right?
Sure.
100% of my investments are through inbound referrals only.
Sure.
Right? It's a friend telling a friend.
Yeah.
I don't think it's possible to do that if you don't live in that country or market.
Sure.
Like opportunistically one-off, like I told you, we have an investment here.
Yeah.
We have an investment in Israel. Opportunistically, things may happen which you may get lucky.
Sure.
But by design, you can't.
Yeah.
Right? So as much as I would love to, because it's a great market, the way I invest and the stage I come in at, it's all about having the right set of people to work.
Sure, sure. Are you actively involved with your portfolio companies or
Zero.
zero?
No, the best angel investor is somebody who never calls the founder up.
Yeah.
And who, when the founder calls him, is available. Right?
Available. Yeah.
So in fact, just on the way over here right now, I told you I've had a crazy hectic few days. It's been very exciting, but I got a call from a portfolio founder. I couldn't answer because we were starting this. So I texted him right away. The station will come out of the country. Anything urgent? He said, no, nothing urgent. Call when you can. So as long as that is there, that's what an angel should be.
Perfect. Sounds good. We see a lot of very refined and very automated journeys which Haptik has created in India for, let's say, GeoMart. Right? I mean, it's a massive development out there. Do you see similar use cases, and are you planning to bring that kind of scale to Indonesia?
Yeah, so Alpha Gift is exactly that. So Alpha Gift launched today at the Meta Summit. And it's exactly the same GeoMart.
Same journey.
It's pretty much, it's exactly the same thing. You come in and you buy groceries on WhatsApp.
Any industries which you are very focused on in Indonesia to start with?
E-commerce,
GK.
digital native,
Okay.
benefit.
Then fintech, of course. It's highly regulated. So yeah.
We think all these are large opportunities. Of course, here and there, we want to engage with telcos because of our large relationship with Jio.
Of course.
We also have Starhub as a customer in Singapore. So we think we can do a lot with the telcos as well. But really, this new age economy, digital, retail data, this is what we get very, very well.
Sure. So will we keep seeing you in Indonesia regularly now?
Much more regularly. This is, like I said, first trip ever.
Yeah.
So absolutely, I think that I'll be here. I like to be here as frequently as needed. And now there is a direct flight as well. Which is like an East Coast, West Coast flight.
Correct.
Yeah, so we good to be out here a lot.
Sure. If anyone's interested in working with Haptik, how do they reach? Whom do they reach?
They can reach out to me, Aakrit Haptik.ai.
Perfect.
And you'll be surprised how I respond to all email and respond very quickly.
I won't be surprised. He responded to me. Thank you so much, Aakrit, for doing this. Wishing you and Haptik loads of luck.
Thanks.
Thank you, Chief. Thank you.